Well, hello and welcome to this week's YouTube weekly update. So, the markets, they had fallen or did fall substantially on Friday. The Russell 2000 down more than 3%. Anytime you see an index down more than 1%, that's significant. We've seen the NASDAQ doesn't like high interest rate environments, tech stocks in particular. That was down 2.65%. The S&P 500 is in bearish opening range mode. We'll talk about that in a moment, down 2.77%. The industrials down 2.8%, and the transport's down 2.23%. So certainly a very bearish day. Why was this, Sean? Well, Jerome Powell, the head of the Federal Reserve, has hinted or strongly suggested that rate hikes will be faster if necessary to slow down out of control inflation. He was looking at taking these 6 more interest rate hikes this year up, say, 0.25%, 0.25%, each time that he raised rates 6 times this year. However, he said that he will be more aggressive and even increase 0.5% at multiple meetings to push the inflation rate down, right? To slow down growth, to keep inflation under control. So the market doesn't like that. It doesn't like when you get higher interest rates. You can get safer returns outside of the market, and this is something that definitely impacts NASDAQ type stocks. Tech stocks do not like high interest rate environments, and as a result we are getting large falls like this in Netflix. Look at this move down around 41%. So that was a big move down. So we definitely saw some bearishness in the market on Friday. There's no doubt about that. I mean, if we look here at our opening range mode, I'll just show that to you here. You can see that we're now bearish, right? We're below the Ichimoku cloud. We're below the opening range, which was 4390 was the floor. We've now obviously crashed below that, and we certainly closed on or near our lows for that day. So certainly very bearish, right? There's no doubt about that. All the sectors that we track are below their 21 EMAs except for consumer staples, and they all had substantial moves to the downside. So definitely risk off right now, and we can see tech stocks down almost 3%. So that was a big move down. Even energy, which had been using this 21 as a support level, that closed below. Could recapture that again, but that was down quite a bit as well. And retail got absolutely smashed, down 4.6%. So everything was very bearish. But if we go inside of this and we have a look here at the combined total put call ratio, when it gets around 1, what that shows you, the 10-day moving average, okay, shows you that when it's around 1, that there's no one left to sell. Everyone is short, everyone is hedged, and there's no one left to take the other side of the trade, right? It's called an insanity point. So too many people have sold, too much fear in the market. This is actually a bullish sign. If we look at the trend, right now 1.69, something around 2, very close to 2, certainly above 2, but close to 2, shows that this is an oversold market and likely to bounce moving forward. The skew, though, which perceives the smart money's perception of a market crash, a 2 standard deviation move or more to the downside, above 135 shows that they are concerned. So that's a bearish sign. The SPX put call ratio with 1.98 reading is neutral. So we've got some bullish signs there. Oversold with the trend, with the combined put call ratio, that is certainly bullish. That's at a turning point as well. So we don't want to just go 100% bearish right now, although with a very aggressive Fed looking to raise rates and even 0.5% at a time, that's going to spook the market. But again, they've been many times. They've got a reputation of saying they're going to raise rates very aggressively and then not actually doing it. So we'll see what happens there. But anyway, that's what's going on with the overall market. So where are we looking to make money? Well, if you've heard the old adage from Warren Buffett, the Oracle himself, he says, when other people are fearful, is when you should be greedy. When they're greedy, you should be fearful. So right now, people are fearful. So if we look at something like Netflix right now, 41% fall. I don't think the earnings were that bad. And it was a big move, right? 40-odd% in a stock is a huge move. So what I would do is, think of this as an elastic band, stretched, right? So when you get the price stretched in one direction too much, it's likely to what? Snap back, right? Bounce back. So, if we have a look here at Netflix here, we're certainly oversold. I mean, we've got an RSI reading there of 19. So it's extremely oversold. So what I'm looking to do is acquire Netflix down at 195, below that 200 round number support, down at 195. I'll make a 6% return in 26 days for doing that. Why? Because the fear is so high, the volatility is so high. I'm getting paid a 6% return for agreeing to buy a stock down at 195 with a real or intrinsic value, according to my calculations, of $320. So if I can acquire it at 195 and get paid $615 for every 100 shares I'm looking to buy, that's a pretty good deal. So I'll have a cost basis below 190 with a real value of around 320 a share. So I like the look of that. And like we've spoken about the last few weeks, we've been on an absolute tear with winning trades. Absolute tear. We've been doing really, really well. Now, another one that we're looking at here is Charles Schwab. Again, big move down. Real value of this stock is around $82, down at 70. And if we have a look here at Charles Schwab, we can see right now that it is, when we look at the RSI rating is 29.75. So that is oversold as we speak. But then if you have a little bit more of a look at the actual company itself, we can have a look down here at the free cash flow. That has gone down, right? That could be responsible for this stock moving down recently, along with the overall market selling off. But if we look at the growth rates per annum for the next 5 years, 23.4%, very solid. If we look at the revenue, that's been increasing very nicely, as you can see there. Bring that up there, as we see there, right? Increasing very nicely, the revenues. If we look here at some of the statistics, the return on equity, I like it above 15, so that is a little low. But good revenue growth and quarterly earnings growth is good. Huge amount of cash, almost 120 million compared to 31 billion compared to 31 billion in debt. So that's a big difference there. Institutions love it, and that's a pretty good deal, right? If I can grab this stock down at 65, okay, if I can grab it down here at 65 and get paid 3% return for doing that, I'll be pretty happy with that, right? So there's another one that I'm looking at. A couple of bearish positions. I don't want everything just looking for it to move to the upside. We want some bearish positions as well. eBay was one that I saw here with a bear flag. So I just bring it up here on this one. So eBay, what did I do there? There we go. eBay. Now, this one has a bear flag, right? So we've got the pole, we've got the bear flag forming below the 200, 50, and 21, and now broken down as of Friday. Not oversold at this point. Beautiful bearish pattern. You can see the pole. We can see the flag right there. Okay. Just started to break down now. Could very easily come down to 50. So what I've done is I've set up a put debit spread on this, looking for it to get below 52. Okay, it's only 53.17 right now, so below 52, and I can make 100% return on my risk. 100% return in 26 days. So that's what I'm looking for with that one. So that's definitely one that I'm looking at. Marvel has a similar bearish pattern, so we can see the bear flag there breaking down as well. So that's another one that we're looking at to the downside to make some money. Now, as far as Bitcoin goes, a few people asking about Bitcoin. Right now, it is trading within this 45-37 range, right? It's been in this trading range for quite a while. If it breaks below 37, it could very easily go down to 30,000 very, very quickly, right? Although if it does break above here, and away we go, right? But right now, it's not really doing much. And again, you've got to understand with Bitcoin and cryptocurrencies, there is this shakeout phase to occur yet. We haven't seen the shakeout phase yet. So the shakeout phase is happening. It will happen. There's 18,000 crypto, and most of those cryptocurrencies are rubbish. So you're going to get a shakeout just like in the dot-com bubble where anything with .com attached to it was going to the moon. Then you had the big bubble burst, right? You had the crash and you had all of those .com stocks that were rubbish. They collapsed, right? They collapsed under regulation. They collapsed because they simply weren't a good investment. And I think you're going to see the same with cryptocurrencies. When regulation comes in, you will see who the real players are, and only the strong will survive. Once you've gone through the shakeout phase, that's when you start to get mass adoption, and that's when you start getting the strong cryptocurrencies really moving up in a big way. So, we haven't seen that yet. Bitcoin's got a halving in 2024 as well. A few things going on. So, really, for me this week, I'm waiting to see whether the market bounces back from oversold where it is right now. Something like the NASDAQ, which obviously has a large weighting in the overall market, we have the March lows here. Could very easily come down to the March lows and bounce, okay? Just over 13,000, so, and that's a round number, 13,000. So that's a significant level as well. We'll be keeping an eye on that. So let's see what the market gives us this week. I hope you enjoyed that. I'll talk to you again next week. My name's Sean Allison. All the best, and bye for now.